What's up you guys, this is Junior Trader, and in this video we are taking a look at QQQ, SPY as for the Nasdaq and S&P 500, and then we'll also take a look at Microsoft, Apple, Google, Amazon. Amazon had its earnings today, so we'll take a look at that as well, and then Meta and Netflix. We'll start off with the tech stocks and then we'll make our way into the indices. So Microsoft, let's start off with that. I know Amazon had its earnings, but I'll do Amazon. I'm gonna do it jumbled today. Okay, I'm gonna pick Amazon at the end. So, but let's start off with the tech stocks here. So Microsoft, first one here. So a red candle, and in the post market as well. So if I go over here, okay, a little bit green right now, but it's not that huge green. But it's just right over here in the post market, a little bit higher here. So. But anyways, guys, so with Microsoft, I have been saying that over the weekend as well. So you can go and check out this video of mine, Microsoft stock, great earnings, but it may fall. And this is what I did over the weekend, 2 days ago. And this is when I did the video around this time. And you can see we have been falling since then, because for me, the technicals weren't confirming the upside on Microsoft. And after earnings, we had a weaker reaction as well. Combine that together with already established technicals like distribution phase, break off that with the flush, and we were just heading lower, right? My short position is already closed in the profits. I have taken profits here and sized out. This move, I haven't reopened my position, but it is great still. I mean, I have been calling this out. So for your informative plays, so if this helped you taking a decision, then please hit the like and subscribe. So yeah, so guys, technicals are on Microsoft are still to the downside. We might be coming down to this time maybe 200 days moving average. That's an area to watch now. We have also broken 397, this potential support, right? That's broken. Now the next area is around the level of 384 almost, and then I would say, well, the bigger one is at 377 actually, and that's where 200 days moving average may also come there. All right, so that's with Microsoft. Let's go to Apple. So Apple has its earnings this Thursday, and it is selling off again. And in the post market, it's also red. And so what I talked about was back here 166 and 91 cents. That as we start to break out of this range, we can get some upside. We got those upsides. Looks like we are again selling off in the supply zone now. I would say Apple, unless and until it's not losing this 20 days moving average, it still needs to be treated just as a pullback. But if we lose 20 days moving average, we are falling much lower. All right, accordingly positions can be taken if based off of the stop loss, and if the level holds the consolidation and any house swing or long, whatever you want to take. I'm going to only talk about the structure, okay? And according to that structure, it's up to you how you want to take the positions with your stop losses. So yeah, it's still at pullback, but this pullback will be negated if we break below 20 days moving average here on Apple. Let's take a look at Google. Google, despite great earnings, been selling off. The area that I talked about yesterday as well, guys, is you gotta watch the level of 160 for any price reaction at 20 days moving average for any potential support. Otherwise, yeah, it's a falling knife. Unfortunately, after earnings, it couldn't pull itself up. And so yeah, we came down to the next level here, 162 and 74 cents. So look at this 20 hours moving average triangular. Wow, that's very rare occurrence. But yeah, watch this level of 160 almost, then you can see the price action there. If you lose that again, it's then can continue much lower, because all this gap up is negated. So wow, that's quite a sell-off. Amazon, as I said, I'm going to talk at the very end. And Meta, still holding my 15% short position on it, and it's weak. I still think it will come down to 200 days moving average pretty soon. That's the direction. The structure is still in that direction. Netflix, negative, and I have been saying that this thing can continue lower and lower. So this is the flush zone, 548. As we lose, tomorrow might be a big move coming. As we lose 548, you can be expecting downside. Just note that wick doesn't come, because if wick comes here and it starts to go up, then it can explode as well, because that's a liquidity grab then, right? So be very careful in trading such flushes as well. You have to be very good with your stop losses, price action, but the direction on this thing is still to the downside. And as if we break $548 lower, we will come down to this 200 days moving average eventually. Oops, didn't mean to go back. Okay, let's go to QQQ, and then we'll talk about SPY and then Amazon. So with QQQ, you already know, guys, that, oh, well, I don't know if I told you, but AMD and SMCI, they had their earnings as well. I'll talk about those as well later in their separate videos. They have their some, Microsoft, Apple, Google, these are the most heavily weighted, and so is a little bit Amazon in the indices. So that's why, I'm not doing AMD and SMCI here, so I'll do a separate video. But okay, QQ, I have been saying that, guys, this blue box is the one that you are watching here, right? Until then, this is just a rebound, and we can come to this blue box and reject and continue to sell off. That's what we did. Now, if bulls wants to turn this again back to the upside, they shouldn't let it go below at least $421 level. They need to hold above it. If we continue to lose 421, then 200 days moving average becomes again the target. And so yeah, this was the distribution phase. Thesis is still the same, guys. I have been telling you that this is just a rebound, and then blue box is the one you are watching. If again, otherwise that's another area that will continue lower. Now if we want to go again up, we gotta not break 421 and 66 cents, because if we do that, then just expect full bearish downside. So if they bulls wants to protect intraday structure, even though it's looking very weak, they gotta pull it up and above 421 and 66 cents. Let's take a look at hourly interval as well. Yeah, below 200 hours moving average again. Yeah, not looking good. Not looking good. It's looking weak. We're very weak to me. Okay, SPY. So let's go to the daily interval first. And so what did I talk about SPY? Even in the morning quick update that I provided you with the semiconductors, I said that, guys, this is the area. If it can recapture above 50 days moving average, it will become fully bullish again. Otherwise, as we lose the level of 507.42 cents, it's bearish and gonna come lower. This is just a rebound in an already going downtrend. That's just a rebound. So yeah, we broke that. Expect 497 tomorrow, and eventually I do expect SPY to also maybe come down to this 200 days moving average down over here. So that's still the play in my opinion, and it's selling off. If bulls wants to hold, they need to hold here, but the sentiment is looking very weak. And if I take you to the hourly interval, we are below 200 hours moving average as well now. And not just that, it's a very weak sentiment. In the post market also, we are selling off. If it spiked, it would have held above 503, that would still have been a little bit fine. But it has lost that zone of another demand zone and pullback, right? So that's the problem. It has lost this zone. So this becomes a resistance now. All right, guys, let's take a look at Amazon. So let's go to the daily interval. So Amazon, you can see in the post market is green, but it's not affecting QQ and SPY too much. Why so? Because it's not that heavily weighted in QQ and SPY. Not as weighted as other stocks, right? Okay, so we have Amazon earnings, right? So let's take a look at that. They beat on both fronts, right? Surprise on revenue as well as EPS. And in the post market, it's at 179 and 85 cents. So that is right up here. Let's draw that line here. Right, sorry guys, almost here, right? What do I make out of it, right? So guys, I want to see the next day always after earnings in the technicals. But if we tomorrow start the day above 180 and 45 cents on Amazon, it can continue up. But let's go to the 4 hours actually on this thing. Okay, so I haven't watched their earnings call. I just went on their report, the earnings and the guidance call. I don't know when they're doing it. I don't think I'll have time to attend that, guys. So check that out on your own. But their future outlook is a little bit lower as well. Amazon forecasts quarterly revenue below estimates. Details not going to go there, but they just forecast a little bit lower. Forecast second quarter revenue below Wall Street expectations. Yeah, I don't know what's the percent lower they're expecting, but guys, I'm not going to go too much in detail because earnings affects the stock price and then technicals changes the next day, and then I pick up those technicals. Okay, all these earnings numbers up high level is all what I usually look for, and then there's some few things, later I go through what they really said in a summary article in their earnings calls. So price may again fluctuate, okay, but this is as of right now, and that's why I want to wait once those articles are out, like fully summarized, and then I'll take a look at that. So yeah, Amazon, if it can start the day above 180 and 29 cents tomorrow, it has a some room to go up, but you have to have a stop loss on that one as well. According to these levels, you can take anywhere, but yeah, wait, let's go to the hourly interval. That's where I think I'll have that better place. You can have actually the stop loss below anywhere, guys, below the 200 hours moving average, because your play is pretty much above 200 hours moving average, right? So you can have it even at 177.99 cents. Again, this is if Amazon starts the day up and it starts to go up. Otherwise, right now it's below 200 hours moving average. Quite a good reaction though on Amazon, right? All right, so that's for this video, guys, and okay, here we go. Amazon guides for Q2 sales of 144 to 149. What's their current earnings actually? Okay, 143, 142, and how much Wall Street was expecting? Okay, Wall Street was expecting 150, but Amazon says 144 to 149. So the outlook is weaker. All right. Well, guys, that's it for this video. If you found it helpful, valuable, hit the like, subscribe. If you need access to my indicators that you see in my videos, links to those tools are in the description below of this video. And with that, I'll see you in my next videos, guys. Take care. Bye.